Hey everyone, I've been day trading AMC this week and I wanted to walk you through some of the videos or some of the methods and reasons that I've been doing it in this video. So you can see here that we have a very sharp sell-off on the 23rd, followed by a very sudden rebound. This would have been a great trade, but I missed it. So I said, all right, I'm going to keep an eye out for something similar and we'll see. Now, of course, it could sell off and then just keep selling off. It could have a dead cat bounce. Like, in other words, it would sell off, rocket up to about here, and then reverse and sell off. Nobody knows what's going to happen ahead of time. But I wanted to walk you through why I've been day trading it. And so I used this on the 23rd as a sort of guide to say, okay, if I notice a similar setup in the morning where it sells off suddenly, gets oversold, I'm going to hop in and make a very quick trade here. And that's exactly what I did on the 27th. So on the 27th, let me just check my notes here. On the 27th, I got in at 27.46, which is exactly where my cursor is, 27.46. And then I sold same day at 29.12, which is right around here. I made around 6% in one day. I had 200 shares. So if you feel like busting out your calculator, you can do the math. You can see what I made in just one day trading AMC. My next thought was, all right, lightning doesn't normally strike twice in the same place, but it did with this one. You can see it's the exact same pattern. Sharp down, rebound up, sharp down, rebound up. This isn't going to happen every single time because if it did, everyone in the world would be trading this exact pattern and we'd all be millionaires. But it's a good parameter. In my case, I used the previous day to set up my goal and what my potential profit might be. Right, so if I could get it around here and sell it around here, and then I can calculate how many shares am I buying. If it does exactly what it did the day before, I know generally what I could make. So that's what I did. The next day, though, it didn't have a sharp sell-off, so I sat it out. And then, of course, you'll see here where it drops and it just hits $26.62. I stepped back that day as well. I did not trade AMC. Then we have this morning, which is today. It's December 30th. Right now, it's 2:30 in the afternoon. At the very open, you see this big green candle. It rockets. I don't like trading in the open on volatile stocks like this because usually what happens, not all the time, but usually a stock rockets and then dumps. So I sat out. I don't want to chase, right? I don't want to buy at the highs if it's going to reverse and head lower, right? I could have bought it at $30 or $28 and it could have dropped to 26. I'd be sitting on a $200 or $400 loss, depending on how many shares I bought. So I didn't do that. What I did instead was I waited for a pullback. The pullback happened within the next few minutes, and the stock dropped to, I got it on my notes here, hold on. It dropped to 27.90, which is where, also again, where my cursor is. That's exactly where I purchased 100 shares. I purchased 100. I talk about this a lot where I say you want to buy some but not all because if it reverses course and heads higher, you do want to have some skin in the game, but you don't want to put all your money in at once in the event that it dumps, right? So you buy a little and then you have a contingency to buy a little bit more. So what I was thinking was if we can get back down into the 26s or even the high 27s or the low 27s, I'll go ahead and I'll pick up another 100 shares. But if I'm wrong and it reverses course, I do want to have some skin in the game. Of course, you could see I was wrong. I didn't get to buy my next 100 shares. So the follow-up is going to be, aren't you mad? Shouldn't you have just bought? Well, but you just don't know, which is why I say it's better to have some skin in the game and not all. Because we don't know what's going to happen. So the question is, aren't you mad? Well, of course I'm mad. I'm a human. Any traders who come out and say, no, I'm not mad. I had my plan. I stuck. Shut up. Like those guys, just shut up. Of course you're mad because you could have had double the profits, but it is what it is and we move on. So the next thing is it rockets, and what do I notice is that it sells off, but it doesn't cross below. It uses this 20-day moving average in the middle of the Bollinger Bands as a support line, right? So it rockets, it sells off, but it bounces off, it rockets, it kind of holds tight on the support line, it kind of sells off, but it touches the support line again, it rockets, but it kind of holds support. And it keeps doing that all day. Now, we know eventually at a certain point in stocks just don't go up forever in perpetuity all at once. They might grow up gradually, but they'll go up and they'll pull back and then they'll go up a little and they'll pull back. Oh, wait, I should be doing it over here so you can see. It'll go up and then it'll pull back a little bit, then it'll go higher and it'll pull back a little bit. So it's possible that this thing continues to run long term, but in the meantime, in the shorter time frame, my opinion is this stock will continue to be choppy and volatile, which is great for short-term trading. But AMC is a company I do believe in long term. I think a company like Netflix or Apple or Amazon or one of those big companies will end up buying AMC at a certain point, because why not? It's going to cost them such a small amount of money in comparison to these trillion-dollar market cap stocks like Apple, that buying AMC would cost them, it would be peanuts, generally speaking. So at a certain point, you can see that the stock does get overbought, and I'm out. I hit my goal, and even though my goal dollar-wise wasn't as much because I only bought 100 shares, it was my percentage goal, which was around 6%, just because that's what I had done the day prior or 2 days prior. And I'm still up on the week because I had 200 shares and then I had 100. And on this particular trade, I'm up around 6.5%. So then you're going to say, well, aren't you upset that you sold it at 29.78, which happens to be around here, when you could have waited a little bit longer and sold it at 30? No, because you know what often happens is you say, I'm not going to sell it here because I want just a little bit more. You get greedy. I just a little bit more. And what ends up happening is when it hits that level where you say, if it gets to that, then you make another bargain. Okay, well, just a little bit more. And then it doesn't hit that level. And instead, what can often happen is it sells off because it gets overbought. And if you don't understand technical analysis, you let greed cloud your judgment. And you go, okay, it's 27.50. If it gets to 30, I'm going to sell. Then it hits 30 and you go, well, 30.25. And then 30.25 never comes, at least in this short-term frame. And it starts to reverse. Now, you don't know what's going to happen, right? Like I said, it can consolidate, it can dump, or it can push higher. If it pushes higher, great. But the analysis is saying, at least to me, short term in the moment, right, this thing is going to sell off. And you can see what it does, right? It hits 30. It hits $30 and around 15 cents. And then look, it drops all the way to 29.50. And at this point, you don't know what's going to happen. It could continue to drop lower, or it could reverse and bounce off of support and move back higher. So anyway, I just wanted to walk you through, keep this video kind of on the shorter side, explain how I traded AMC, day traded it twice this week, why I got in, why I got out. Again, I got out on this one because stocks don't go up forever. This thing rockets, and even though it is holding support on this 20-day moving average, I did come close to my goal, even though I only had half the amount of shares that I wanted, which was kind of a surprise. I thought I was only going to be up around $100 on the day, at which point I probably wouldn't have sold. I probably just would have held because $100 isn't worth taking. But my end profit was $188 plus the $200 that I had made the day before. So $388 or almost $400 day trading the stock twice in 1 week. Not bad. 6%, 6.5%. Not bad for the week. So that just shows you my thought process. And also keep note that AMC is kind of trading in a range right now. It's not exact, right? I always say technical analysis should be approximations, not guarantees and all of that stuff, but you can still kind of relatively see a pattern where it's up, down, up, down. So keep that in mind. Thanks for watching. Please hit the bell. Please hit the subscribe. By the way, I should just say, long term, I do believe AMC will go higher. I do, though, think that this thing will probably sell off either tomorrow or next week, at which point I will buy more. And if it doesn't, well, I've still got my investments, so I still do have some skin in the game. And now I'll say thanks for watching, and have a good day.